Hey folks, welcome back to the channel. It's Liquid here. And it seems like the stock market has been doing really well recently. Here's a look at the daily chart for Apple, Microsoft, and Alphabet, all doing extremely well. In fact, the S&P 500 is now at the highest point since last year, August. But I have noticed a few things that indicate the stock market maybe isn't going to continue this trend, at least in the short term. So I'm going to share a few indicators that I've noticed that's giving me kind of pause for concern. As I mentioned before, I think 2023 overall is going to be a good year for stocks, but maybe over the next few weeks, not so much. And the first reason is because not all stocks are going higher. The S&P 500 is made up of 500 different companies and they're given different weights. So for example, Apple is given a 7.4% weighting and Microsoft makes up 6.7% of the index. So the large cap companies are at the top, and then down at the bottom, you have smaller cap companies which don't make up much of the index. If you have a real bull market, it would make sense that not just the top handful of stocks, but a large number of components in the index you would expect to move higher. But that is not the case right now. S&P has another index called the S&P 500 Equal Weight Index, and what they do here is give equal weighting of every company in the S&P 500. So theoretically, each company would have like a 0.2% weighting. And this way you can see market breadth. So when this index moves up, you'll know that it's not just the largest companies that people are buying into, but there's broader market participation. So when we compare the two graphs together, the white line here is the equal weight index, and then the blue line below that is the more common S&P 500 index. So as you can see, the equal weight index has not reached above its February high, but the S&P 500, the blue line, has. So this goes to show that not every stock is bullish right now. It's just the top few companies that are really bringing up the S&P 500. Now, of the top holdings, the largest one is Apple. And if we take a look at Apple stock, it has just come up to a major resistance level. So if I take a look at the weekly chart, so it's easier to look at, you can see Apple has been in this sort of downward channel for roughly 2 years now, and recently it's just broken up above it over the last few weeks. Each bar represents a 1 week time frame. So that is officially a break of the channel. However, it does look kind of overextended right now, because if I turn on the 9 count signal, you can see that we have recently just reached a 9 count here. If a bar finishes above the close of the bar from 4 weeks ago, so for example, this one here, it closed over here at this level, 154.8. That's higher than if we count 1, 2, 3, 4, the close over here, 152.4. So that's why this is a 1. And then if the next week it continues to do that, then it marks it as 2, and all the way until it goes up to 9. And once you get a 9 count, then that represents exhaustion in the trend. And usually this means that the market is either going to stall or make a corrective move the other way. So this works in both directions. Here we can see previously it didn't go up to 9, it just went up to 8 was the highest number before it had a major correction. And also down here, this is a 9 count buy signal because it's counting down. So each candle closed lower than the close 4 candles prior. And that happened 9 times over here. And then we had a reversal in the trend and Apple went up. Up here, there was another 9 count, and then that was followed by selling. So it doesn't always work, of course, but it often does follow this pattern because the market can't go up all the time and it can't go down all the time. So whenever we have a massive move like we did in the recent few months, then at some point, even if the trend is going to continue going up, it needs to take a break. And the 9 count signal is often a good indicator to tell you when that break might happen. So because Apple is the largest holding in the S&P 500, a lot of people use this company as the bellwether for the rest of the index. So that's just another sign that maybe we're going to get some kind of corrective move in the stock market over the next, at least the next few weeks, if not more than that. If we look at other components of the S&P 500, like Microsoft, well, that made a 9 count sell signal as well. And then last week it did push higher, but sometimes it does that before falling back down. And also for Amazon, another component of the S&P 500, that also had a 9 count sell signal. Another reason why I think the S&P 500 might be going lower in the next couple of weeks is because we have a divergence in the MACD. If I go to the daily chart, so up here is the S&P 500 daily stock chart, and then down here, this wavy pattern is the MACD, which is a momentum indicator that kind of shows how strong the market is moving up or down. And usually when we have like upwards movement in the MACD, which is mainly just looking at the blue line, the stock market also tends to go in the same direction, going up as well. And when the MACD is going down, you can see the market tends to follow that also. However, right now we have this divergence just over the last month or so, where the MACD is sort of moving downwards here. However, the stock market has been going up. So the MACD is showing weakness in the market, but the price of the stock market is heading higher, or at least the price of the index, because remember, it's not a wide basket of stocks, it's just the index, which is basically a tech-heavy weighted index. In other words, tech companies are doing great, but not all other sectors in the S&P 500. So this is just another signal that's kind of in confluence with the other things I've said that doesn't really make sense why the market is going up right now, and it's likely that we're going to see some kind of correction soon. And then finally, let's take a look at Bollinger Bands. This is the last sort of indication that maybe the market is a little bit too overbought right now. Again, looking at the daily for the S&P 500, using the SPY index here, these Bollinger Bands, the blue line on the top and the bottom, represent extreme levels that the market can go to, and it's very hard for it to, once it touches it, to continue touching it or even go above it. So on Thursday, we touched it, and then Friday, we closed back below the top of the band up there. So over the next week or so, it's likely that we're not going to continue going higher and higher because it's already at the top of these bands here. And in the past, you can see how it reacted once it hits the top here. And then same thing with the bottom. Of course, the bottom represents potentially oversold, and then so we likely see a bounce up from there. So didn't really touch it here, but we got a bounce anyway. Touched the top of the bands here and then went down, reached the bottom, went up. As you can see, it doesn't really like to stay below that band for too long, even though the bottom band here is going flat. And it wouldn't be hard for the market to, continue falling and even just a little bit to go below this band. But the Bollinger Bands, they want to keep everything kind of contained in the middle. So it's likely that once it hits an extreme, it's going to go the other way. Even over here where it was bearish, it reached the bottom. It didn't have a bounce right away. It took like a week or so, and then it got a bounce. But even then, there wasn't a single day here where the market closed below. It went outside of these bands intraday, but by the day's close, it went back up, and that's why you see these wicks here. So those are sort of just some things that I'm looking at right now, and I thought I would share that. Now, I want to be clear, just because the market is likely to go down, I am not recommending being bearish or shorting the market right now, because if I go back to the weekly, the trend is still going up, right? So it's not a good idea, generally speaking, to fight the trend. And even though we might get like 1 or 2 days of pullback, if the bulls still want to push the market higher, then we could go all the way up to this level here, around 432 for the SPY, because that was the previous resistance up here. SPY overcame the high from recently this month and also from earlier this year in January. So the next target it should reasonably want to go to is 432 up here, the previous resistance back in August of last year. So even though you're going to look really smart if you short the market right now and it goes down, for some reason, if it doesn't go down and it continues going up, then you could lose a lot of money. So what I'm doing is just looking at the trend right now, and which is still going up, and I'm just being cautious. If we get some bearish signals and the market starts to go lower, then that would signal to me that the top is probably in, at least in the short term, and the SPY is going back below 390. But as long as this trend continues, this rising channel over here, then I do not want to like buy puts or anything like that. So I'm currently not going to buy any new stocks I'm just going to wait and see what happens. If we get a correction, I'll see how low the stock market is going to head, and then once I see some buy signals, then I might want to add more to my portfolio. So thanks a lot for watching. I hope you got something out of this video. Good luck with your investments, and until next time.